Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced in the lower part of yesterday's range. And at this point, heading into the open, we have pre-market support at 95.5 to 97.5. That is the immediate short-term support area. And on the upside, we have 99.75 to 01.75, which we'll be using as the micro bull bear zone. So as long as ES is holding below 99.75 to 01.75, short-term it signals weakness, and continued balance below 99.75 can lead to continuation lower into the 90 quarter to 92 quarter initial support, where responsive buyers can still be active because bigger picture, we are still trading in a larger time frame uptrend. On the upside, a breakout above 99.75 to 01.75 would indicate responsive buyers being fairly aggressive and active in the market, and that would bring a move up to the 07 to 08 pre-market resistance zone into play. That's still a short-term inflection point where sellers can be active on first test, but it's not really a strong resistance area because it has been tested multiple times, and a move back up to 07 to 08 may result in a very small reaction, and not really even a tradable reaction unless there's a clear-cut setup in real time. And then from there, if we can cross 07 to 08, the next inflection point is 10 quarter to 10.75, essentially yesterday's high of day and the key high volume node within the current balance. And after that, if we can actually work through 10 quarter to 10.75, then the market has potential to go up and fill the gap at 2014, and most likely 14.5 to 16.5 can then cap the upside on the day. So as we move higher, and in the event that we even move higher from here, these resistance zones along the way, they are still active areas of resistance, and that's why they can still, pose a problem for upside continuation. But we just have to be careful on the short side if the market starts showing a lot of momentum as we head into 07 to 08 and 10 quarter to 10.75. Now, 10.75 is a better inflection point than 07 to 08, and if the market is really exhausted as it heads into 10.75, then of course there can be a more of a rotation or reaction at that area. But even 10.75 doesn't necessarily have to hold and cap the upside. So because we are in a bigger picture uptrend, and overall if we break out above 99.75 to 01.75, it would indicate that yesterday's poke below that area was essentially a failed breakdown attempt. That idea can result in some decent upward momentum. So heading into the open, this pre-market support and micro bull bear zone are really going to establish and set the tone for the day and the bias for the day. And if we fail at the bull bear and pre-market support, then the market can quite easily go down and test 90 quarter to 92 quarter. This is still again an area where buyers can be active. As far as the reaction we can get at that zone, from initial support, we can actually completely reverse and go back within the prior balance or the prior range. So from 90 quarter to 92 quarter, the first inflection point would be 95.5 to 97.5. But then if we can clear that, again, ES would have some upside potential because of that larger time frame bullish bias. If we're seeing a lot of weakness intraday, and let's say the AD line is showing extreme weakness and the NYC tick is showing a lot of sustained selling and downward momentum, then there may just be a tradable reaction at the initial support, and we can then go lower and test some of the lower support zones. But overall, the market would simply be extending the recent range, and all the way down to 80.5 to 82.5. We are still going to be trading in a very large trading range, and buyers can be active on first test of every support zone on the way down, with 80.5 to 82.5 being very key at this point on the larger time frames. So the immediate bias can be established by using pre-market support and the micro bull bear zone. The larger time frame can actually remain bullish as long as we're holding above 80.5 to 82.5. And given the econ calendar this morning, with ISM non-manufacturing index being the primary catalyst, and then looking ahead and knowing that, we have the employment report due on Friday, it's unlikely that we're going to get any, big sustained selling in this market. So the idea is that even if we break lower below the pre-market support zone, buyers will likely still step in, and we can actually get a reversal back up on the day time frame. And then if we actually hold pre-market support and break out above 99.75 to 01.75, then we can simply balance at higher prices and continue balancing above the micro bull bear zone. So that's how the price structure is set up at the moment. Of course, we'll still have to read the market in real time and determine the level of strength or weakness that the market is displaying in real time to figure out how aggressive we can be on the buy side. But from a market structure perspective, that is the context that we're trading in right now. Looking at the other markets, they are still holding up okay, especially the Nasdaq. Russell broke below its low from yesterday's session, but overall it's still trading in a pretty wide trading range. So bigger picture, all these markets are just simply stuck in a big range, and they're all in a very clear uptrend. And for that reason, every time we head lower, we see this pretty decent reaction from the buy side, and I think that theme or that pattern is going to continue heading into Friday's employment report, and then perhaps we can get some bigger directional movement. But overall, the market is still stuck in a pretty decent trading range here. If we hold the micro bull bear zone, then we'll be working with this range from the micro bull bear all the way up to the 14.5 to 16.5 resistance. If we fail and we break pre-market support, then we start working within a wider range. But overall, the market is still going to be stuck in a big balance. So not expecting a trend type move, and overall thinking any breakdown can still result in some buying in this market. So those are the main ideas heading into the open. Let's keep an eye on the pre-market support zone, the micro bull bear, ISM non-manufacturing, main catalyst this morning at 9 a.m. Central, and we'll take it from there.